With the real estate market as slow as it is, I feel like one of the best opportunities for long-term investors right now are home builders. A lot of the home builders have been beaten down in the 2022, 2023 real estate market slowdown, but I do feel like they're going to be a big part of the solution to the US housing crisis going forward. One of my favorites in this space is a company called Dream Finders Homes. Ticker symbol is DFH. They went public just a couple years ago, and they've been growing very rapidly, mostly through acquisitions, but a lot of organic growth as well. They're based in Jacksonville, and they have operations in that market, Orlando, the Carolinas, and a lot in Texas, just to name some of them. So these are some of the higher growth housing markets in the country, and there's a unique aspect of their business model that I'll get to a little bit later. Before we get started on the recent business numbers, please take a minute and click subscribe to my channel if you don't already. And take a look at the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now at fool.com/Frankel. So, first, let's go with the bad news. Dreamfinders Homes, they're an up and coming home builder. And as I mentioned, they grew a lot through acquisition, so they have a lot of debt relative to some of their competitors. That's definitely a concern going forward. Their debt is roughly the size of their market cap. They view themselves as capital allocators, and their debt load is nothing they can't handle. They're still very profitable despite having to pay interest on their debt right now. And I don't see that changing anytime soon. The stock trades for about 10 times forward earnings, and that takes cost of debt into account. The other thing is that, and a lot of home builders are seeing this, margin compression. Their gross margin on their homes has fallen from about 18.7% a year ago to 17% now. Not only is it a higher cost of funds when they have to borrow money to build houses because of the interest rate environment, but home builders are having to offer a lot more incentives to get buyers interested these days. Some of that might be in the form of buying down mortgage rates. Some of that might just be cutting prices if a home buyer is ready to walk away or something like that. But their incentives are clearly working because of this. The good news. The good news is that they closed on over 1,500 homes during the first quarter. That's up over 11% from a year ago. And not only that, but they're getting a 4% higher average selling price. Combine those two things together, you're seeing 16% year over year revenue growth despite the challenging environment for real estate. The company is still nicely profitable. Its earnings were up 14% year over year. And the big acquisition they made a year ago, Maguire Homes in Texas, is performing better than they expected. And not only that, but we've seen cancellation rates spike in response to higher interest rates and rising home prices. Those are starting to normalize. The cancellation rate dropped from 32% of contracts in the fourth quarter to 20.9% right now, which is getting closer to historical norms. Looking forward, Dreamfinders expects to close on 6,000 homes this year. Just over 1,500 closed in the first quarter, so they're on track for that. They ended the first quarter with a backlog of nearly 5,500 homes. That should keep them busy for the rest of this year and then some. And they saw 1,448 net new orders in the first quarter. That's up from 1,100 in the fourth quarter. So again, only about little less than 11 times forward earnings, let's call it. And the unique part of their business, if you're not familiar, is they are a land light home builder. In other words, they don't actually buy any land until they have a home under contract to build. So this is in contrast to a lot of home builders models where they'll buy like a big plot of land, build streets on it, break it up into different neighborhoods and subdivisions and things like that. Dreamfinders doesn't have that upfront expense. Only other home builder that's actually used this model to this extent is called NVR. Ticker symbol is NVR. They're the parent company of Ryan Homes. That might be a familiar name to you. They've used this land light model. They went public in 1993, so 30 years ago. Since that time, NVR is up by 575 times its 1993 IPO price. So that means if you had invested $10,000 in their IPO, you'd have almost $6 million today. I'm not saying Dreamfinders is going to replicate that performance, but the point is that this is a tried and true business model. Having that extra capital available to allocate where you want it instead of having it tied up in hundreds of millions of dollars worth of land can give a big competitive advantage over time. NVR, for example, has been able to buy back stock a lot more than other home builders. I'm hoping Dreamfinders uses some of its excess capital to pay down debt. So there's a lot of different ways they can allocate that capital to create superior returns. And this is one that I am a big fan of. Great insider ownership, by the way. The CEO owns about 2/3 of the company, which is rare for a publicly traded company. So a lot of skin in the game. It's one that I'll be watching closely as the real estate market hopefully starts to rebound. And it's one that I am pretty heavily invested in my own portfolio. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.